Hello and welcome to another NASDAQ update. Let's take a look at the NASDAQ chart, and I just want to provide a quick update. It's pretty much coming nicely together here on the NASDAQ. We finally see a deeper pullback. In the last update, we had pretty much a structure nearly complete up here. And the question was, okay, is the pullback going to be a wave 2? Like that would allow a more direct extension higher, which is a very bullish, more direct scenario that could take us into the 18,000 plus region? Or are we dealing with a white structure, which is pretty much the same scenario that I'm observing for the SPX? If we go with the SPX, I would prefer white. Okay, what is that scenario? Well, in this scenario, we're dealing with an A, B, C structure that developed between October, end of October, and the December highs. It has to be an ABC because we're dealing with an overall ending diagonal that is started in October 22. But this is just a short-term perspective here. So looking at the ABC in A, then this would now be a sizable B-wave pullback ideally, which would ideally be structured as A, B, C in wave B. Let me double check if the support levels are still relevant and accurate. I need to lift them up a little bit. So that's support. That means if this is now a B wave pullback, and I should really change the wave degree for this B wave. Let me check. Yeah. If this is really this B wave pullback, then it should be a 3-wave move down. And the price should now, in an upcoming corrective rally, which I would expect from now on, should not break ideally above the previous high, and the rally should be corrective in nature. So I'd be watching for an ABC structure in wave B. So let's zoom in. Let's talk about this white structure further. This is overall still bullish, but short-term bearish. As long as the value doesn't drop below 14,739, I would still be watching for a rally to new highs in 2024, possibly in end of the first quarter. Or maybe, it can happen quickly rather. So in the first 2 quarters, really, okay? Then we will probably reach a more significant top. Important is to recognize that these are important Fibonacci levels here that ideally, or the lowest one ideally doesn't get broken. We've got the 38.2 Fib level, the 50%, the 61.8. They're all relevant at 15,933, 15,575, and 15,224. Ideally, the B wave doesn't even drop below that, But okay, we can still allow for the 78.6 Fibonacci level at 14,739, but that would be quite weak. And it would increase the risk of breaking and invalidating, because invalidation point for this scenario is down here at 14,140. But we don't want to wait, we want to get a warning before, right? So in the white structure, ideally, the market has now put in a local low. With that engulfing candle that we see here on the 4-hour chart, we might have put in a local low at least. Yeah, let's go to the 1-hour chart. This is what I see for the SPX as well. Potentially here a local low, but I still would like it to get above the 16,500, 590 level to confirm that further, that really a low has formed. And then the move to the upside would be, again, A, B, C structure here. A bit like that, okay. Change the wave degree, okay. And important would now be to understand, okay, what's the resistance for this B wave? So B wave resistance should really, so the value should really not exceed $17,008. So okay, getting above that level would already start to shift probabilities towards the yellow count, the more direct bullish extension. Okay, what is support for the yellow count? Well, in the yellow count, we also have an ABC structure. It's just that the A wave finished here end of November, and it's a little bit differently or structured differently. And the support level here would be this one, between 16,438 and 16,028. I'll put them in different colors, but this is basically the support area for the yellow count. And If now in the rally we see an impulse and we see a break above 17,008, well, then we are strongly leaning towards yellow. The rally that we see now, this at least this bounce that we see, it will reveal a lot. If it is corrective, we can clearly lean towards another C wave to the downside. If we see a first impulse, then the pullback will offer another entry opportunity potentially that comes, because also this third wave should be quite aggressive and it will also have 5 waves. So bottom line is we have support resistance. The resistance area goes up to 17,008. A break above it will shift probabilities towards yellow. Also, a 5-wave move up, especially above resistance, will be an even further confirmation that yellow is playing out. Whereas if we hold resistance, the move up is corrective, we see a first 5-wave move down, that would be clearly white. I'm leaning towards white. Okay, that's also because that's the scenario I'm primarily following for the SPX. But on the SPX chart, there's also a scenario where we could see further extension higher, but it's less probable in my opinion. So, the next rally, probably the next few sessions, will give us much more clarity. But it seems very likely that we've seen here a local low, and I would pay attention and I would watch for resistance, for a reaction in this range between 16,801 and 17,008. Whereas actually we can add the 38.2 fib level as well. Would be a shallow B wave, but possible at 16,717. So we'll see how that microstructure develops over the coming sessions, and I'll keep you updated. And yeah, hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. If you're interested in daily updates about the S&P 500, video updates, as well as regular updates about stocks, check out our S&P 500 and stock service. I also regularly update the NASDAQ in there, but it's not officially included, so it depends on capacity. But yeah, there are also some updates there regularly. So check it out. Link is in the description. It's the Patreon membership. Thanks a lot for watching. Have a great day. Bye-bye.